Is Tesla stock so weak these days? There's a clear underperformance relative to the market, and we believe that there's three fundamental reasons. One is the need for a new CEO. In other words, Tesla needs a new CEO because Elon Musk doesn't want to be CEO anymore. It's as simple as that. He's the owner, he's the founder, he decides, and he doesn't want to do it. We're going to elaborate on why we think that he doesn't want to be CEO and what the solution is. Second is China, and third is the high interest rates environment is going to put a dent on demand here and in Europe and potentially also in China. This is a Not Even Wrong podcast. It's December 8, 2022. This is Krindalco. For the day, the fund is flat. The market's up 1%. For the year, we're down 59.4%. The market's down 16.4%. We're underperforming by 43%. So this underperformance has, as we said in the prelude, three fundamental reasons. Let's first start with the first one. Tesla needs a new CEO, or if not CEO, there's three solutions to this. Elon Musk doesn't want to run the day-to-day of Tesla anymore. Why doesn't he want to run it? Well, first let's analyze the signals, because he hasn't said it, but it doesn't matter what he says. Let's just follow his actions. So he bought a media company, Twitter, and for better or for worse, it seems to be the glamorous thing to do. If you follow other big founders, particularly Jeff Bezos, for example, he did the same thing. He went into media or Hollywood, and he wants the glamorous life in Hollywood. And, you know, you can replace glamour with, let's say, free speech. It doesn't matter what the actual reason is. It seems that these billionaire types, these big founder types, after a while get bored and they start doing things like buying Twitter, for example. And unfortunately for us shareholders, this is a problem, because if somebody like Elon Musk spends time with, this is just one example, Hollywood mogul Ari Emanuel in wherever, Mykonos, Greece, has parties there, starts hanging out with a crowd like that, then buys a media company and enjoys the glamour, maybe not enjoys it in a sort of, party way, but maybe even in a masochistic way. But it seems that, instead of running Tesla, focusing on AI, focusing on 4680, focusing on China, expanding the factories in Austin and Berlin, instead, Musk likes to or prefers to spend his time thinking about how to navigate the speech conversation in Twitter and so on and so forth. So the signals are there. They're unambiguous, and for us shareholders, it's now the question is, okay, what do we do? And I think the answer here is that there's three solutions to this. One is that Musk stays involved with Twitter and hires somebody to run Tesla. The second is he hires somebody to run Twitter. And the third is, and that's probably the most likely, which is that maybe he stays on board with Tesla, but has some sort of chief operating officer, somebody who runs the day-to-day business. And Musk stays there for the big picture. Now, before we go into what's better, what's worse, I think let's talk a little bit about what it actually means to be a CEO of a company like Tesla. This goes to the core of Orange Capital Partners. The purpose of Orange Capital Partners is to generate wealth by investing in fundamentally new concepts and engineering practices. And we've also mentioned many times before the natural Sharpe ratio concept, which in general means the following. The natural Sharpe ratio concept just means that we think that companies that iterate a lot, make little mistakes, and also correct those mistakes very quickly have a higher chance of outperforming anybody else or generating wealth. So if we look at that concept, then we can extrapolate from that concept towards the skill set necessary for a founder CEO of a company that generates wealth. And the skill set is geared towards iteration, mistake making or reduction of mistake making, and then also error correction. So those are the sort of the big picture skill sets that a founder, a CEO needs. And in particular with Tesla, I think it's very clear that those are the big skill sets that Musk has. In other words, that's what makes him so special, that he is able to to iterate very quickly, compound very quickly, create a big mouth through that iteration and compound, and therefore not have competition, generate wealth, solve big problems, and so on and so forth. So, in other words, what we need is either Elon Musk continuing to do that, which is take big, bold bets and then iterate very fast towards those bets. What we mean with big, bold bets is, by the way, not the kind of stuff that, let's say, a typical CEO would do, which is build a big factory. Like, I don't know, Intel buying Mobileye for 15 billion. That's not risky. That's not bold, because these people are managers. They're investing other people's money. If they fail, they somehow wiggle themselves out. Maybe they get fired. They get another job. In the worst case, they retire somewhere in SoCal or in Hawaii, whatever. This is not what we're talking about here. We're talking about a guy who treats his company like his child, who takes big, bold bets. And what we mean by that is, for example, a bet like, I want to design a car without a steering wheel. And I want to design my production line such that within the next 3 to 4 years, we won't have any steering wheels in the car. Those are big bets, because if you're wrong on this one, you're going to have a big headache. But if you're right on this one, you're going to change the world. And in order to take such bets, you have to gear the whole organization towards making that happen. And that's where the value of a CEO like Elon Musk comes in. That's where we believe that people like Drew Balino, or the guy who runs the semi under Musk, and so on and so forth, they don't have that. They're very good professionals, interesting people, smart and all that, but they don't have that ability because they're not the owners. They don't have the skin in the game like the owner, like in this case, Elon Musk. The same, by the way, with SpaceX. You know, the ability to relaunch the rocket was from the get-go part of the design concept. If you follow the SpaceX founding story, there has been a lot of design choices that could have been made a little bit easier. Launching would have been a little bit easier. The first few failures could have been avoided, maybe even, if you didn't have relaunch as a fundamental constraint within the design concept. But relaunch was the main thing that was necessary for SpaceX to succeed. So what I'm saying is that sometimes in the history of corporations, certain very big bets, risky bets, often technology type bets, by the way. Again, I'm not talking about things like building a factory in Nevada, although even that, actually, no, I'm sorry. I take that back. Building the Gigafactory in Nevada was a very big bet that Tesla took very early on when their volumes were negligent, because they needed to have that scale to be able to scale up to wherever they wanted to be by, let's say, 2018, and then go from there. Also learn from that experience to be able to scale up the gigafactories around the world. So that was a big bet that they took with Musk's guidance. And it wasn't just building the factory, but also designing the cell such that the scale can be achieved, and also the production speed and the scale and all of these things can be achieved. By the way, we have similar examples around, let's say, Amazon is a good example. When Jeff Bezos took some very bold bet on the software front for the company to go what we call cloud native today, which in other words, it just means that you have distributed computing and software development in a distributed way in the cloud. And that enabled, or that paved the way for what became AWS. So you have these pivotal decisions within companies that drive towards a fundamental differentiation and success that later on translates into profits and monopolized profits. This is also what Peter Thiel means when he talks about the in 0 to 1, about those types of entrepreneurs that cannot help but do something in a manner that nobody else even knows how to do, and then succeed. So these things are all related. And the reason I'm talking about all these things is because this is the kind of skill set that we're looking for in a CEO. And since Musk decided not to be CEO of Tesla anymore, now the question is, can this be replicated? Can somebody else fill in those shoes? Or, and maybe this is the best case scenario for us, other than Musk giving up on Twitter and giving it to somebody else or let somebody else run it, Let's assume that option is not open right now. So we need, Musk is going to be involved with Twitter for a while. So what we need is a guy who runs, or a lady who runs Tesla on a day-to-day basis, and Musk still being sort of the galvanizing factor as a big picture CEO on top. This is probably the best case scenario that we can hope for. And I started the question, why is Tesla trading so weakly? The reason it's trading so weakly is because this is a major risk. Shareholders don't like this. A lot of people have invested in Tesla for this whole, it's 100,000 people, but there's a galvanizing factor on top, which is Musk, and he doesn't want to be that factor anymore right now. He's clearly choosing that with his fees, walking. He might not walking the talk, but he's doing it. He's just involved in Twitter all day long, and that is a risk that Tesla now is facing. Of course, a company like Tesla always has problems, and one of the problems right now is China and demand in China. But we have other problems. We have the AI, we have 4680, we have the Semi, we have the Cybertruck. So there's a lot. We have the ramp up of Austin and Berlin. So there's a lot of vectors that are not showing in the exact right direction they should be showing. And then we have competition also catching up. I mean, even though they're years behind, if we have the main CEO of Tesla wasting his time with Twitter, well, then clearly the others have more time to catch up. So that's a big risk that unfortunately we face as investors. And we think that there's a way out. And the way out is, again, we believe that the best solution would be sort of a SpaceX style. We have a COO, like a Gwyneth Shotwell type person that runs the company on a day-to-day basis, is also the spokesperson of the company. And then we have in the background somebody like Elon Musk still taking the big picture bets. I have a hard time finding similar situations. We have a co-CEO situations with Netflix, which we don't like. We had a co-CEO situation with Whole Foods, which didn't work out very well. We have a situation at Oracle where Larry Ellison is involved at a big picture level. He calls himself chief architect. That was so-so. It was all right, but it wasn't such a great situation. Actually, the best situation where the founder stepped down and where a new CEO came and drove further growth was with Microsoft. And then, of course, we have the Apple situation where the founder unfortunately died, or the founder CEO, the guy who really built Apple, which of course is Steve Jobs, particularly Apple 2.0 when he came back. And then he died, and Tim Cook took over. So we have success stories. We don't want to reason by analogy. So either way, it could go well, it could not go well. But clear for now is that we need a solution. We need a solution. And we believe that Musk doesn't want to be CEO anymore. He's showing that. He's probably bored. Maybe the big picture decisions are not as important right now because there's a lot of execution. Austin and Berlin need to be executed. 4680 needs to be executed. So there's a silver lining here that we could think that maybe what Musk is thinking is, look, right now it's all about execution. So I have time to focus on other things. And the execution again is simply, okay, look, the big picture path is given. We know where we're going with 4680. We know what we want with Cybertruck. We know what we want with the Semi. We know what we want with the AI. Now let's execute. And then in 2 years or so, we come back, we reevaluate the company, we write another master plan, and we go from there. That's potentially also something that might be going through Musk's head. But fundamentally, what's most important here, and this is the key to what I'm trying to say here, is that we need a solution because Musk cannot run Twitter on a full-time basis and at the same time be CEO of Tesla and not have somebody else stepping in and taking care of the day-to-day problems. How should the pricing be done in China? Should they cut production or should they lower prices and keep producing? What is the solution in China? China is slowing down. China has a problem with demand because China is being in lockdown and COVID and issues and political issues and all that kind of stuff. So we need a solution in China. That's something that has to be decided at a top level through some sort of CEO type situation that cannot be decided just by mid-level managers who are delegated sort of in an interim CEO situation just because the CEO again is dealing with saving free speech with a website that used to be run by pot-smoking liberal fanatics, and now all of a sudden he wants to sort of change that. That's a very difficult task, and again, it's not something that we wish he was doing, but he is doing it, and he has the right to do it. It's his choice, and therefore we as investors, we have to think about solutions and drive towards those solutions with the company. The second problem is China. We mentioned China. China is an issue. We've said that several times in the past. The reason China is an issue is for two reasons. One is we have a COVID situation, a lockdown situation, which just is a simple demand problem. We have less demand because people either have less money or the economy is slowing down or people are scared. And second, there's also a risk of totalitarianism, of more totalitarianism in the country, and that also increases the risk. Now, having said that, we believe that China is still, we sometimes forget, China is a massive market. Now, this year, China might be only 17 million cars, which is, I think, according to Sandler Piper, Alex Potter, the research lead there for auto and particularly Tesla in China, China hasn't been this low for 9 years. So this is the Chinese auto market is in shambles. But this can reverse very quickly. But right now we're in a situation where we might have to cut down on production just to not overproduce and have too much inventory. The problem is also the rest of the world cannot absorb this much demand. Maybe they can. Maybe Thailand can pick up 30, 40,000. Australia, 30, 40. You can get to like maybe 100,000 Asia ex-China, which is not bad. But it's not. We're talking about million cars run rate production. So ex-China demand for Teslas could be maybe 200,000, 300,000. It's not again ex-China Asia. But we need China to grow, and if it's not growing, then maybe the solution is to cut down production, and this is why the stock is in a bad shape recently. Now, we as shareholders want the company to do the right thing, and the right thing here is to safeguard resources and not overproduce. But on the other hand, also Tesla has been a volume story for a long time. And why is it a volume story? Well, because we want to have a large installed base, which creates more monetization revenue for the future. It creates more also mouth to mouth, and Tesla has been how should I say? It's been a volume driven value creation story. It's been like that for the last 5, 6, 7 years. Maybe in the beginning it was more of a startup with less. It was more like, okay, does it actually work? Is the technology going to work? Is the proof of concept even there, and all those sort of things? But right now we're in a situation where we have volume-driven growth, where we have increasing the installed base. It's kind of a bit like Apple. Once you have a large installed base, you can then increase software revenue on top of that. So in other words, it might be useful maybe to lower prices and keep driving volume. But those are things that have to be, those decisions have to be made at a much higher level than, let's say, the people that run the factory in Shanghai. And unfortunately, again, our CEO is involved with other things right now. So that's part of the problem, that also the market is kind of uncomfortable. And I think third is the interest rate environment in general, and the availability of credit, which will dampen demand. And again, a situation where Tesla has to make some decisions. Maybe they can alleviate the financing for customers because they have a much better credit rating than a lot of customers right now. Things like that. Again, it all comes back to the same old question that I started in the beginning, which is we need a person, a capable person that can run the day-to-day for Tesla, because the current CEO doesn't want to do it, and he doesn't want to do it because it's showing his hand. He wants the glamour of running a media company. He wants to solve free speech. Whatever he wants to do, it's not aligned with the mission of Tesla, and therefore it's necessary that we have a solution. And ideally, we have somebody like Glenn Shotwell that runs the company, makes those big picture decisions, which are not visionary decisions, but should we drive volume? Should we lower price? Should we take a hit in margin, or should we keep margins high? Those types of decisions are very important. We can't make those decisions here from the outside. They have to be made from the inside. In other words, we don't know what the right thing is to do. My gut's telling me keep margins is better than driving volume, as long as you can drive volume at a certain, or in other words, keep margins as long as you gain market share. Even though your volumes might grow less than you expected, as long as you can keep margins and grow market share, you're fine. Once you start losing market share, rethink your margin situation. This would be our sort of my gut feeling of how I would solve this problem. But again, this is not, this is something that again has to be solved at the big picture, hopefully by somebody who is in a position to take over as a CEO or maybe a CEO. So to summarize, why is Tesla trading so weak? The three reasons. One is we need a new CEO. Musk doesn't want to be CEO. We need a new CEO. We've elaborated what a new CEO, sort of the skill set of a new CEO has to be. It's either a complete replacement of the CEO, then we need somebody who can take those bold technology decisions. We think that that's not the ideal solution. The ideal solution is that Tesla still remains intact as a company that is run by Musk, but there's a day-to-day Glenn Shotwell type situation where he or she runs the day-to-day business, makes decisions about pricing in China, for example, about volume, about margins, those sort of things. The second reason is China as a risk of totalitarianism, which is hopefully, we believe that this will mitigate itself over time, but right now that's a risk. And third is the credit situation in the US that we also believe will be solved because the interest rates will not keep rising at the clip that they have been rising. And hopefully we also will have a lowering of rates and a lowering of the terminal rate, which will ease a little bit the strain, the financial strain in the economy. Thank you.